Hey everyone, welcome back to my Dividend Waterfall portfolio. Well, the Dow went down. At one point, it was over 700 points, and you know everybody's panicking and freaking out. But to put in perspective, here's the S&P 500, the long-term chart. This was during the Great Depression, the Great Stock Market crash. This was the crash of '01. And this was when the world was coming into end in 2008. As you can see, even if you bought here and didn't sell and kept buying the market, you did okay. We'll pull up the yearly chart. Here's when I sold. I sold about October. I actually sold at the top. Not that I was trying to do that. I just was going to use the money elsewhere. And actually, if I would have just kept with my plan, collecting those dividends and reinvesting, I could have bought all these shares a lot cheaper while everybody was panicking. Not panicking, but selling all the way through December. And I started buying here, like, I think it was March, and start reinvesting on this portfolio. And now it's starting to go down again. So what I decided to do today was bought another small position, another $250, and bought some more shares. Let's see. So yeah, I'm definitely down for the day. Not terrible. Down $16.09 or 0.86%. That's the nice thing about owning a lot of your blue chip dividend paying, dividend aristocrat stocks like that is they usually do better in a sell off. I mean, they'll still go down, but those dividends help secure the price a little bit. And let's see, if I go into my research, my pies, and pull it up. Actually, you can see my yields going up on my dividends. It's now 3.864. I think it was like 3.7 before. So your yield goes up too as you buy. Another thing I don't think I ever talked. Keep your expenses low. Like my expense ratio on this is 0.04, which is hardly anything. You definitely want it under 0.5. But just getting back to the whole yield and everything, I'm just gonna keep. I could see this market keep going down. I'm not worried. I'm just keep adding a little bit every week, and dollar cost average down, and just keep riding it out. If I was getting close to retiring, I'd be a little more nervous. But if you got 20, 30, 40 years of investing or more, once again, you look at that long-term S&P, even if you're just buying the S&P index, you're in the long run, you just keep investing over time, and troubles will come, troubles will go. If this would ever go to zero, that would pretty much mean every company in America is bankrupt. And if that happens, we're in bigger trouble than your stocks going down, and your dollar probably isn't going to buy much anyways. If you're truly worried about that, you're better off buying gold, silver, food, water, ammunition, going in that route. I'm not saying that owning some of those things is a bad thing. I always think it's good to be prepared. But getting back, just saying the whole market in general is going to go to zero, or, people freak out, I don't see that happening. Now, I'm not good at timing. I'm definitely not an expert. And, yeah, I got lucky here when I sold if I was going to stay out. But you look at the long run, people here who sold or here thought it was heavy, it still kept on going up, and they missed out on gains. Even I did. Like I was showing, if I would have just kept reinvesting here, my yield would have been a lot better. So, like I said, I'm not an expert. This is just what I am going to be doing, and it's just a long-term game. And I mean, even I'm still up for the year, or since I've had this portfolio, I'm still up almost $65, or 9.1%. So even with the past week and this big sell-off, the biggest sell-off for the year, I'm still up. And in about 3 more months, those dividends are going to start kicking in, and that's going to add value, and it's going to erase some of these negative gains. I mean, I'm down for the quarter, 6.6%, but once those dividends come in, that'll help cushion the blow, and just keep investing on the long term. But that's my strategy, that's my goal, and days like this I look as a buying opportunity, and if it keeps going down, I'll still keep buying. If it keeps going up, I'll keep buying. That's what's nice about M1 is as it's going down, you're getting more shares for what you put in. So it kind of, you dollar cost average anyway. So when stocks get expensive, you're getting less shares, but when they go down, you're getting more. So going over my biggest holdings, I have the most money in O, Realty Incorporated. Gain, they're a BDC. Lowe's, Procter & Gamble, Kimberly-Clark, 3M, Johnson & Johnson, IBM, Ford, and my 10th one is Vanguard long-term corporate bonds. For my total amount of shares, the most I have is in 7.5 in Gain. I got almost 5.5 in Ford, 1.8 in GOF, and 1.6 in Realty Corp, 1.2 in Old Republic, and they trail off after that. So I'm starting to get a share in everything. I still got a while to go, but I'll just keep adding to them. But anyways, I just wanted to do a quick video, and for anybody that's newer, and just not to panic, just a little bit at a time. And don't ever put money in you can't afford to lose in investing. Don't be like some people and put their rent money in or grocery money. Put money in you don't need back for a while. And just take it one day at a time. Anyways, good luck, and thanks for watching.